Volatility in the marketplace is rocking the industry. Buys large and small can feel like a minefield. So how do you ensure you're getting the best price? We'll tell you how. Our Resin Smart team brings over 20 years of experience to deliver real-time market information to get you real results. Oh, and did we mention 14 billion pounds of transactional visibility? Yes, that's billion with a B. Actionable strategy that adds to your bottom line. Partner with RTI today.
Hello, everyone. I'm Joe Pryweller, Conference Director for Plastics News. Welcome to Ask the Expert at the 2021 Executive Forum Virtual Edition. Ask the Expert is your chance to engage with professionals on a range of topics and to interact with questions. Today's experts are Mike Burns, Vice President of Polyethylene Markets, and Scott Newell, Vice President of Polypropylene Markets with RTI. Mike and Scott will provide real-time market updates and outlook in the polyethylene and polypropylene resin spaces and answer your market questions. They will answer your questions after the presentation. To submit a question, enter it into the Q&A box on the right-hand side of the screen, or if you're watching on Plastics News, LinkedIn, Facebook, or YouTube sites, you can submit your questions via those platforms. With that, let's start things off with Mike Burns of RTI. Take it away, Mike.
Thank you, Joe, and thank you, Plastics News, for the invitation to present. My name is Mike Burns. I work with RTI's polyethylene clients. Our main goal at RTI is to identify best-in-class pricing and strategies to get there, but we also provide information to our clients to help them make the best decisions possible. There's a lot going on in the polyethylene world, probably more this last month than ever before. So let's get to it and move to the next slide, please. So obviously, number one is the Texas storm. Allocation volumes are supporting about 60 to 70% of the contract requirements. And we had about 50% and maybe about 60% of the Gulf Coast is back now. The number varies and the timing varies, and the information is not coming across like we would hope. And there's still some startups going, and it's a big challenge to get this going. And it's going on week number 4 of limited resin availability. So suppliers have the 7-cent increase in place following a 7-cent increase in February and a 5-cent increase in January and December. So we are up 42 cents since January 2020. There is a 6 to 9 cent increase announced by several suppliers out there. Most are running with a 9 cent for April. Very good chance some or all of that gets put in. It's too early to tell. We're going to have to see how the restarts in April go. So year-to-date price changes, 5, 7, 7, maybe another 7. So 2020 we had 24 cents. And we've already had 19 with 7 on the table. So pretty historical in pricing. Go to the next slide, please. So here's what's really remarkable in the secondary market. There are auctions now that actually have a buy now tab. Last week's auction the buy now tab for high density off grade and extrusion grade was $1.42. Prices now are consistently above $1. So we're seeing prices 10 to 20 cents higher than the contract prime price in the secondary markets. And people are fighting for resin. High density and low density are the worst, hitting historical highs. All off grades are selling at 10 to 15 cents above contract prices and limited availability. Export market, there is no export market. The domestic prices are 20 to 30 cents over the Chinese price. And oil prices will support future higher prices with future demand. Ethylene prices are above 50 cents. They're going to get better as ethylene plants come back. Estimation right now that 80% of the ethylene is back online. Ethylene is oversupplied. So as the polyethylene plants start consuming some of that, things will get more balanced. We'll see some pricing come back to where it should be. But right now, those in need are paying the high price. Next slide, please. Asia, there's no imports from the U.S. Feedstocks are going up with oil, and demand is very strong in Asia, China specifically. Good news, a lot of economic news out of China. They're at a 6-year high. prices are continuing to be supported. Agricultural season right now, May turnarounds. There's a lot of things out there that will keep that price high, demand being number one. Latin America, quick Braschem update. They've come to an agreement on the pipeline. They look to have resin available to their customers by the beginning of May. So back to November levels. The Latin American market had a wake-up call last week. They are now competing with North American off-grade prices, where they typically had an advantage over the North American price. They are paying the North American price plus, and they are in a need of resin. So that's a challenge for Latin America. They are going to be paying a lot more than they thought they were going to be paying. Europe, same thing. Limited availability, very good demand, higher feedstock costs. There's some force majeures there. Any specialty imported product into there, these U.S. metallocene products, etc., that come into the European market are not being delivered, and it is a problem over there. Specialty resins are super tight. People are looking to find the air freight product from the U.S. to cover their needs in Europe. Next slide, please. So here's just a quick shot. Last year we saw the inventories decline consistently from the March shutdowns because of U.S. demand and exports. So exports were strong in the first quarter, second quarter exports were strong, and then U.S. demand picked up. We saw September, COVID kind of got under control as far as expectations, not the disease itself, but demand expectations. And we saw 1 billion pounds of inventory build from October to January. And that's when the Texas storm hit. We dropped 1 billion pounds in almost half a month. We've got another month here of very limited material. So I anticipate that number to continue to go down. And then next we go on to when do we recover? Next slide, please. So this is just a demand, an export, and a production picture versus the 2019 averages. 2019 was a very good year. There was all the new capacity was online. There were no disruptions. What we saw in 2020, the graph is not as dynamic as I would hope, but in April and May and June, we saw exports high because of the uncertainties of the COVID demand in the U.S. And then in June and July and August, the U.S. demand, the yellow bar, started to pick up. That was a draw on inventory that allowed four consecutive months of price increases. Production has stayed the same. You see pretty much consistently all the way across until we hit February. And now we're going to see March being probably lower than that as well. But, the quick question is when do we recover? The previous slide showed about a 3 to 4 month recovery for 1 billion pounds. That's with some exports. So the exports are not there. I would think it's going to be 3 to 6 months recovery without the exports because our inventory levels will be so low. Demand will continue into the spring with people lining up at the big box stores to do home projects with the COVID vaccine rollouts, restaurants opening. We get into the fall time. We have more people going back to an office. We have schools reopening, and we have the worst word of it all is the hurricane season's coming up. So we've got a 3 to 6 month recovery here before we can start thinking about what the directions of the pricing are going to do. We have 43 cents on the table, another 6 to 9 cents pending. That would put pricing up 100% over a year and a half period, which is pretty remarkable. What we're going to do is watch that secondary market and the activity in that secondary market. The price I talked about on the first slide with $1, as that moves down, that'll be the first sign of recovery, but not until that moves will be in any type of recovery. Next slide, please. So just to conclude here, 30 days, that 7 cents is in. I do expect the additional increases to be implemented. I don't know how much of that 9 cents we see, but that'll stick around through Q2. There's good resin demand. High oil prices will continue to firm resin around the world. It's going to take some time for us to get back to that November 20, December 2020 level where we thought prices were going to decline, and everything changed pretty rapidly. So the good news is demand's strong. The bad news is there's no resin, and prices are going to have to go up. So that'll conclude the brief polyethylene update, and I'm going to turn it over to Scott Newell to discuss the polypropylene markets.
Yeah, thank you, Mike. Thanks to Plastics News for having us. My name is Scott Newell. I cover polypropylene for RTI. I'm going to go ahead and start out just by reviewing, where things stand today. Obviously, the whole industry is kind of suffering the aftermath from the storm that the Gulf had back in February. So restarts are happening. Over the past 2 to 3 weeks, we've had a pretty steady companies and plants restarting their assets. We're estimating right now that probably, about 75% is back online. But I will say that not all these plants are running at full rates. So, the industry as a whole is probably really only running at about 50%, might be, slowly creeping up this week above that. The majority of producers are on force majeure or allocation. We're seeing allocation ranges anywhere from 50% to 75%. Really kind of depends on the producer. Demand is strong, especially from certain market segments. Consumer products has been really strong, housewares, rigid packaging, caps, closures, cups, containers. Automotive has been strong. Some of the medical applications, all pulling very, very strong. We are starting to see some shortages develop throughout the chain, all the way from the pellets at the producer, finished goods at the converter level, and even finished goods down at the consumer level. Basically, there's very little inventory all throughout the chain. We're also starting to see polypropylene converters throttle back production. We're seeing cutbacks ranging anywhere from 20 to 40%, I would say, even 50% in certain isolated cases. And virtually everyone you talk to at the converter level is very worried that in the next 2, 3, and 4 weeks, they're going to be running out of material. And maybe not running completely out, but experiencing very, very severe shortages. So on top of all that, polypropylene prices are up 78 cents a pound. That's a 162% increase from 2020 lows. So this is definitely probably the most challenging market conditions that I ever remember. And honestly, it's likely to get a little bit worse before it gets better. On the next slide here, we'll look at production. We're just starting to see the first pieces of data come out, since the storm hit back in February. So the ACC has posted their February numbers. This is production. And so February production was down 39% from January to February. That gave us an operating rate of 53%. And inventories were down 480 million pounds. That's easily, the largest 1-month inventory draw that we have on record. And that's just February. Looking at March, heading into the month, everything was still shut down. We are starting to come back, but, we may be at 50% or slightly above now. So March is going to look a lot more like February, than any of the prior months. The next slide, please. This is days of supply. And with that 480 million pound draw, days of supply dropped down to 19.4 days. So just for perspective, a balanced market is kind of in that 32, 33, even 34 days of supply. Anything below 30 days, you can feel the tightness in the market. So again, this is just as of the end of February. We don't even know yet, the damage that is being done in March. Next slide, please. So here's a look at demand for the previous 12 months. And I guess I should point out too that, polypropylene was experiencing very challenging conditions prior to the storm. And really the root cause of all this, that's happening is demand. We've had very strong demand starting back in the fourth quarter. So if you look back in April and May here, demand definitely took some hits. This was as the country shut down last year. We did start to recover, got back up to pretty normal demand rates. And then in the fourth quarter, there's just this surge of demand. Basically, the industry was running 8 to 10% above normal. And now we get into this year. If you look at January and February, demand is down, but that really isn't a good reflection of where real demand is. We see demand is very, very strong. This to me is more a reflection of limited supply. Basically, producers were selling everything they made in January and February. If they could have made more, they could have easily sold it. So we see demand is stronger than January and February represents. Moving on to the next slide, we'll just wrap up here with some final thoughts before we start taking some questions. So for March, spot PGP is actually down, from its highs. During the storm, spot PGP reached its high as $1.25. It immediately started to sell off, and it's continued. Last week we traded at 68. It came down 64, 62, and yesterday we saw some transactions at 58 cents a pound. So based on that, it looks like the March contract settlement is going to settle lower. Maybe, it could be 20, 25 cents even, just based on where spot numbers are today. Wherever PGP settles for March, there's also a 6 cent a pound margin expansion that's in play on polypropylene itself. So wherever PGP settles, kind of offset that by 6 cents. It's very likely all of that is going to go through. I will caution though, even though March looks like, we're going to see some price relief, a lot of this is due to all these assets being down, and there's basically been very few buyers of propylene. So prices have come off quite a bit. Once rates come back, I'm very concerned that we could see some more volatility, in the coming months. Probably my biggest concern looking ahead is just the low level of inventory throughout the chain. We're seeing shortages everywhere, from store shelves to at the converter level, and obviously polypropylene is way short as well. And it just feels like demand is not responding. There's been very little price response. So we're not seeing the kind of demand destruction that normally would happen at these price levels. We're not getting the kind of help from imports that we would normally get as well. So my feeling is that when, polypropylene production starts to ramp back up, there's just such a big hole to fill all throughout the chain. The polypropylene has to run very, very hard just to, get back to balance. I was running some numbers this weekend. If polypropylene production can run at 93%, which is a stretch, and demand even drops off a little bit, let's say to third quarter levels, it takes us 6 months to get back to that balanced market, that 32 days of supply. And that's kind of that's a rosy picture, actually. There's also scenarios I ran where it takes 12 or 15 months. That would be worst case scenario. The problem is here too, and why I'm worried about volatility, is if polypropylene needs to run hard just to backfill the whole chain, it's going to put pressure on propylene monomer. The concern is propylene won't be able to keep up with that level of production. And so we'll need to incentivize incremental production of propylene monomer. And in order to incentivize that incremental production, prices need to move higher. So there's a couple concerns. Volatility in price, even though March is coming off, we need to be concerned what happens further out. And then also just a big concern of some of the shortages we're seeing and how that's starting to trickle downstream. So, be very cautious of that. So I'm going to wrap it up right there. I'll turn it back over to Joe, and we'll start taking some questions.
Great. Thanks, Scott. Thanks, Mike, for terrific presentations. And as Scott said, we're now ready for questions. You can type your question in on the right side of your screen. There's a chat bar there, and type them in, and we'll get to those in the order received. And at this point, I will ask your first question. It comes from LinkedIn. A viewer on LinkedIn wants to know, this is for Mike, was asked during Mike's presentation. How long do you see the spot pricing remaining divorced from the contract index pricing?
Right now, I think we're going to see until the allocations are removed and the contract buyer is getting 100% of their requirements, which probably is not going to be till May, then you'll start to see the secondary market, that off-grade price, move down, and it could move very rapidly. But that's the number one indicator. It's a very good question, and it's the number one indicator of when this thing's going to recover. The availability of off-grade versus prime. I think we're going to see a premium going into May, certainly through April. Going into May, premium of secondary market pricing higher than contract pricing.
Great. I should mention too, besides typing in your chat box, if you're watching along on social media, you can type in your questions too on Facebook, YouTube, or LinkedIn. Second question that came in has come right from here on the right on our chat box. I think this is for Scott, but either of you can answer. How do you see demand and pricing moving forward long term based on increased online buying that started in the pandemic? That's kind of a question either of you or both of you could answer, I would guess.
Sure.
Yeah.
Scott, go ahead.
Well, I was just going to say, the demand part of the equation has been very interesting. Consumer demand has been extremely strong. We're not just seeing it in plastics. You can look at basically any commodity, from metals to paper, lumber, you name it. There's just been very strong demand. And it's been interesting. Historically, we see prices up like we are in polypropylene, and you see a response. You see, some demand destruction. And we are seeing, some of that right now, but not near the level that you would expect. There's just such an appetite for demand. So that's really one of the big questions, I think, moving forward. As some of these price increases that we're seeing upstream start to trickle down to the consumer level, how do they respond? Will we see, demand destruction? I think there's also a question of, as the country starts to reopen, do we see a change in consumer buying patterns? People have been spending a lot of money on home repair, renovations, home organization. They're putting offices in their home, et cetera, et cetera. And so do we start to see a shift as the country opens up? And that's been a big topic, I think, among everybody. Where does it shift to more services and travel and vacations as people want to get out of the house? But right now, it's such a strong appetite for all these products. It seems like price doesn't even matter right now. So it'll be interesting to see how that plays out.
Mike, do you have any thoughts?
Yeah, no, we can all do this study ourselves by going to the store, and you walk down the aisle and you see what's empty, and the shelves have been empty, partially empty the entire year. Different parts of the grocery store, different parts of Home Depot, Walmart. And when those start to fill, that's when the demand will change. But right now, people have money, people are excited, they're getting out of their house. It's going to be a strong demand summer. The money that's not going into travel and restaurants is being spent in the aisle. So, when you walk down the aisle or whoever does shopping in your household, ask them what's missing. And when that's not missing, that'll be the first indicator that demand's coming back or is changing.
Yeah, it sounds like there's some pent-up demand out there. People are finally getting out again, getting vaccinated and everything else. So interesting to see how that changes. Next question came in via LinkedIn. This is for Scott. Are on-purpose PDH units causing the decrease, as a 50% that comes out of refining can be the driver, as rates are even lower now than in 2020? So are PDH units causing some of the decrease that we're seeing in any of this in anything coming out of refining?
No, I wouldn't say so. I think, basically we have 3 PDH units here. 2 of them are back up and running, so that's good. The Enterprise PDH has been down for a planned turnaround. From what I'm hearing, they're on schedule to start back up, which is supposed to be right about now, mid-March. So hopefully between now and the end of the month, we get that unit back online as well. I really think a big reason for the decline we're seeing right now is just all the downstream demand for propylene monomer has been shut down. And so there's been very few buyers out there. And hopefully that's allowed propylene to build a little breathing room. But that to me is the big driver why prices are down. And as I mentioned, in my presentation, that's also one of my biggest concerns moving forward is once everything starts back up, this level of demand that we're seeing is gonna, and the shortage of inventory all through the chain, polypropylene is gonna need to run hard, even if we start to see, some of this demand destruction that we've been expecting. And it's going to be tough for propylene monomer to keep up with that level of demand without incentivizing that incremental production that we get, whether it's from higher yields from the refinery or if we need to incentivize heavier based feeds in the steam cracker. And it's going to take higher prices to create that incentive. And that's why I'm worried that prices may not stay at this level.
Great. Here's a question for Mike. How will high oil prices impact North American prices?
Well, unfortunately, 65% of the world is made out of oil. Pellets are made out of oil, and we're a natural gas-based feedstock that allows us to export anywhere in the world. So with higher oil prices means higher prices around the globe, which means when our inventories start to get back to normal, if there's an opportunity to export to keep those prices in the domestic North American prices higher, that will happen. Last year, 35% of our production was exported, and that kept our prices higher. And we will see that export to keep our prices from falling too fast to manage inventories. So the oils, and at the end result, higher oil prices helps U.S. suppliers manage their inventories by exporting to any region in the world whenever they can. Right now, we don't need it because our prices are so high and there's no resin. But when the resin becomes available, when it will, we'll have an outlet if oil prices continue to climb.
Great. We still have a little bit of time, so if you want to type your question in on the right side of the screen or on LinkedIn, YouTube, or Facebook, we'll get to those. Scott, a question for you. Does polypropylene capacity have anything to do with what's happening in the polypropylene markets?
Fundamentally, no. Obviously we have capacity that's down because of the storm, and so that's creating a short-term issue. But longer term, capacity of polypropylene has not really been the issue. I think if you look at last year, industry operating rates were right around that 83, 84%. So we're underutilizing our capacity right now. It's not a capacity issue. I would say the bottleneck is really more on the propylene side. If we continue to see very strong demand and we have to utilize some of that polypropylene capacity, the question is, can propylene monomer keep up with that level of demand, and that's more likely where the bottleneck is.
Here's a question concerning sustainability from a viewer on LinkedIn. How will such scenarios impact the demand for sustainable recycled alternatives in the future? Besides the general trend for sustainability, people asking for that, is there going to be increased demand for that just because of the way the markets are looking right now? Either one of you want to answer that one?
I don't think the drive and the continued sustainability is going to go away. It's getting bigger and bigger. This is not really a setback as far as that drive forward. There still be product available to recycle, but this is not really a setback. This is post-consumer market is a small part of that, and basically the prices will go up, as every price will go up, but that's just a market condition. I think the sustainability, we're going to see that more prominent, but people who want to participate that are willing and able to pay the price to get that going forward. You see more and more collecting sites and consumer demand for that product, so it's not going away. I don't think this will affect anything other than the prices are up and will go up, but they'll move again with the market as the market comes down.
Okay, good. Similar on polypropylene side, Scott?
Yeah, pretty much same thing. I mean, there's a strong appetite for PCR resins, sustainable recycled materials. That's not going to change. And really the only impact we're seeing right now is prices are up.
Okay. Question for Mike. Do you see polypropylene demand destruction coming about due to the high prices that are out there right now?
Polyethylene.
Polyethylene, yeah, sorry.
Yeah, the answer is no. People are still buying. Even though the prices are up so much, I think as they have money in their pocket and they're not passing up a product right now because it costs 50 cents more or $1 more. It's not happening. And all the industries are getting their prices up. I think the challenge will be 6 months from now when we've spent all our money from the spring, and where do we have money left to buy stuff in the groceries when it's higher. But your grocery bills will be higher, but people won't stop buying milk. So it's just going to be a challenge on that side.
That's true. You're still going to need your food and drink. Question coming in from LinkedIn. Are EMEA and Asian suppliers going to use this NAFTA disruption to make inroads supplying NAFTA region? A question statement, they're being opportunistic today with NAFTA prices, but this viewer says he hadn't seen interest in longer term supply deals.
On the polyethylene resin side, there really is no resin coming into this country. We do have some opportunistic now because of the situation, but there's not long-term resin opportunities to provide to ship into the U.S. from any other region because of our cost structure. As far as finished products go, the film in polyethylene, the big one is film, and some of the tariffs had prevented that, but now with the price spread, there will be film that's bags in your garbage can at home, or you're at the end of the aisle at the big box store, those type of bags, any commodity type, that there will be an advantage there. Bringing in parts, I really can't answer that. I don't know. I mean, I know there's empty containers shipping to China right now, and they're going there to come back full. So they're not shipping empty containers without products sitting there waiting to come back. So there's some strong push from China into the U.S. market, and it's going on right now. And we'll, I can't really speak to the NAFTA part of it. I don't see that. I don't have visibility to that.
Great. Scott, anything on the polypropylene side, or is that similar?
I mean, we're definitely seeing some products, polypropylene coming from that region. over to this region, taking advantage of arbitrages that are wide open right now. Our price levels have been, the highest in the world by a lot. And so there is currently some good opportunities, and we are seeing some material start to flow this way, North America, Latin America. And there's actually, it's being pulled this way too. People are trying to import, whether it's pellets or finished goods, just because of some of the shortages that we're seeing out there. It's just, there's been a lot of issues with it. There's a lot of logistical issues. There's been a lot of delays, and really, it's just availability has been an issue as well. I think we would be importing more product today if all these challenges weren't in the way. So volumes are actually, I would say, lower than I expected at this time. But certainly, there's product, yes, flowing to this region.
Great. Well, last question also comes in from a viewer on LinkedIn. Will the value and demand for industrial polypropylene waste offset the expenses of waste recovery? Is there any profit in starting a business in waste recovery right now, Scott?
I don't know. That's kind of an interesting question. I would say certainly there is a strong demand for waste streams right now. Scrap polypropylene is very scarce. Prices are certainly up. And, does that create an opening or a window to start a business and maybe offset some of the, fixed costs of doing that kind of work? Possibly. But I don't want to be the final answer on that one.
Sounds good.
One of the things, Joe, along that line of that question, a lot of the costs of recycling is sorting and transportation. And every one of us has a garbage can that we throw everything into that we think is recyclable. But really, there's only two products that are recyclable, and that's your PET bottle and your detergent and milk bottles and that type of blow molded bottle. But there's a lot of extra plastics that's going in there, and if there was a way for the plastics industry to educate the consumer at the garbage can in your house, that would take a lot of expense out of it, and maybe also expand the availability quite a bit.
Great. I lied. I have one last good summary question here that I should ask coming in from LinkedIn. For both of you, when do you anticipate the market to normalize? Is that going to be happening anytime soon?
So,
Mike, go ahead.
We're not going to be normal for a while because the demand's strong. Demand is just about to kick off. The consumer isn't on this conference call. They don't know what we're talking about. They're going to go out and shop this weekend and going into the spring. They're not going to go. It'll be a stay-at-home summer. Institutions will start opening, schools will start opening, and we have hurricanes, and we've got a lot of hurdles before production is back to where it's supposed to be. Some resins are fine, others may never, it may take months to go. So specialty resins and there's restarts cause problems, and that's where we are right now. This week, last week were restart weeks, and that's where you find out we have problems. So boy, it'd be nice to say this year is going to finish up normal, but I said that last year.
We all know what happened. Scott?
I think it's going to take a while for things to get back to normal. I mean, that's what it feels like today. There's just demand is so strong right now. There's a lot of money being printed and put into the economy. People are spending it. I mean, and I think that's the goal. But one of the consequences is, you start running out of products, and that's my big fear. In the coming weeks and maybe even months, that we start to see some shortages in a big way, potentially in a big way. We could see, missing parts for big assembly operations. So it is a concern, and like I mentioned in the beginning, I think it's going to get worse. So It's really all about demand at this point. It's kind of what got us into this situation, especially for polypropylene. And we just not really seeing the kind of price response that we normally would expect to see. It's just the appetite is huge out there. So it's it's going to take a while before things get back to normal. Just getting back to a balanced market's going to take some time. And if demand does not back off, it's gonna be here all year.
Well, with that, do either of you two have any very short parting comments you want to make to the audience out there? Start with Mike.
Yeah, if you have visibility to the secondary or off-grade markets, that's going to be the number one indicator for price corrections, availability, where the markets are going, and that will, as capacity improves or restarts happen, when the secondary market says no, or more resin becomes available and brokers start moving the price, that'll be our first indicator. Right now, we're totally opposite of that. You have to buy on a website and hit buy now at $1.42. When that changes, so if you have visibility, we said this all the time. Talk to as many people as you can, get the landscape out there. That'll prepare you for when things change, which they will. But right now, it's not that environment. So cover your needs and communicate with your suppliers. That's the best thing you could do right now, and also tell your customers that prices are going up and to expect that. And I don't think there's going to be much resistance out there. Like Scott said earlier, it's not just plastics; it's everything on the shelf. So that'd be some closing thoughts there. And back to you, Joe. And thank you again.
Great, thanks, Scott. Any party comments?
I would just say, for polypropylene, just, if you're expecting a big correction lower, you might want to rethink that. I mean, March, it looks like we're going to get some price relief. I just would be very cautious as far as expecting that to continue and get back down to levels that we were seeing last year. It's possible that could happen. If that demand part of the equation, backs off, if demand backs off, but we're just not seeing those signals right now. I would, there's a lot of risk in the market, and it's very likely we're going to continue to see some volatility.
Great. Well, with that, we'll wrap up. I want to thank Mike Burns and Scott Newell of RTI for their real-time outlook into resin markets and what's going on at the moment. If you have additional questions from Mike and Scott, please feel free to reach out to them directly. The email address is scrolling across your screen there, so you can use that if you'd like to. There it is. If you'd like to contact them directly for any more information about RTI or have any questions about the resin markets. I want to remind people, don't forget to tune in at 2 p.m. Eastern Time today for our next session at the 2021 Executive Forum Virtual Edition. We'll hear from our keynote panel on how to rapidly respond to a pandemic. It'll feature John Boudreau of PTI Engineered Plastics, Jeff Foster of Core Technology Molding, Christian Harold of Teal Plastics, and Mike Williams of Cadillac Products Automotive. It'll be followed by a session from Joshua Baca of the American Chemistry Council Plastics Division on plastics in the new environment during the Biden administration, followed by our Golf with a Pro interactive session with Mark Durland, one of Golf Magazine's top 10 teachers. So that follows our sessions today if you want to get some tips on better golfing once the weather gets nice here. I'm Joe Pryweller with Plastics News. We'll end with a short message from RTI. Thanks for watching and have a great day.
Volatility in the marketplace is rocking the industry. Buys large and small can feel like a minefield. So how do you ensure you're getting the best price? We'll tell you how. Our Resin Smart team brings over 20 years of experience to deliver real-time market information to get you real results. Oh, and did we mention 14 billion pounds of transactional visibility? Yes, that's billion with a B. Actionable strategy that adds to your bottom line. Partner with RTI today.